Hello friends, in our last video we had given our word of caution for Bank Nifty. Reason was simple that somewhat overexcitement on an oscillator, that was RSI, was leading into some divergence kind of a scenario, and accordingly we had given our caution. And we can see that somehow bears managed a loss of 0.81 percentage for Bank Nifty over its previous close. Now if we check the data on a chart, then we can see that somehow yesterday's high and today's high is almost the same, and in fact we can say that 123.6 percentage of the previous swing acted as a resistance today. Now as such, today's candle formation is a kind of an inside bar. We shall consider or assume that a swing is over on the upside, and we can consider that now probably downside momentum may start in. For that, we shall be changing our ratios for the Fibonacci retracement, and accordingly we can see that what can be the probable supports. At present, looking at this structure, we can expect 38,700 and 38,200 shall act as a support. Until that, we can say that a bull trend or upside momentum is continued. Now if we ignore this and if we try to see RSI oscillator, then on a line chart we can say that overexcitement in this structure, actually it is not an overexcitement, I am sorry, but somewhat underperformance in the RSI is leading into a divergence kind of a scenario, which is telling that somewhat more downside cannot be ruled out. In fact, if you people remember, in our last video we had also discussed that though RSI breakout looks like or momentum is bullish, but a caution is must. The reason was simple that RSI breakout was not on account of a consolidation mode, but it was on the basis of some oscillator or indicator adjustment. Bollinger Band here shall act as a indicator and not a oscillator. So this is not a breakout in actual, but it is just a differential way of adjustment of an indicator. Now if we see 15-minute chart, then on a 15-minute chart we can see that yes, Bollinger Band did its job. How? See, this is a consolidation part on an overall basis, and from then a downside momentum come in. So this can be considered as a breakdown on the basis of Bollinger Band. RSI over here is in a oversold region, so somehow we shall refrain using it. If we see 1 hour chart, then again middle Bollinger Band acted as a support, and going forward any candle that closes below this particular candle or a last candle low, we can expect a more downside or temporary small time frame trend reversal. If we apply 100 and 200 SMA, then still they are really very far and should be ignored for support on a 1 hour time frame. If we consider 15 minutes time frame, then yes, 100 SMA is nearby, which is near to our 2-3 trading sessions low, and accordingly we can say that it is at 38,700 or near about levels, which was near to our Fibonacci support as well. So overall we can consider that 38,700 must act as a support going forward. Now if we consider option chain data, then for option chain we can see that the max pain is at 39,000. We shall ignore it as expiry. Aggressive trading is yet to take place and expiry is very far at present. If we consider the data point, then highest OI is at 38,000, which is having a OI of 38,000 near about contracts. Same thing if we try to check on a call side, then 47,000 contracts are in a OI and 40,000 is the strike price to watch out for. So 40,000 shall act as a resistance and 38,000 may act as a support going forward. Support part are bit weaker because OI is bit less, and CE front OI is bit stronger, so resistance are very strong and supports are weak. 38,000 is having a highest OI and our last close is at 39,000, so bulls and bears are equally balanced at present for Bank Nifty as per the option chain data. Now, if we consider FII data, then we can see that a good option buying has taken a place. But practically this data makes no sense if at all we don't check participant wise OI data. Now if we consider participant wise OI data, then we can see that overall FIIs have reduced their positions in an index on across all the sides. That is, put shorts were covered, put long were covered, call long were covered, call short were covered. So whatever the positions that they had in a previous trading session got covered to a larger extent, and that was because of the reason that they had taken a position bit early on account of an event that we had in the name of budget, and they have covered up their positions. If we see net data as per our today's EOD, then we can see that a call long, put long, call short, put short, all these datas are having a lesser, I repeat, a lesser OI in comparison to the previous close. So frankly speaking, if anyone is considering only FII index open interest data, I'm sorry, FII index option buying data, then it is wrong. It should be directly related with FII open interest positions as well in the options. We hope this point is going to make you clear that this big figure should not be considered as a bullish or bearish indicator, but it should be correlated with FII data as well. We hope this video is going to help you to understand open interest data and chart setup as a whole. See you friends with another video. Till then, stay safe, take care, bye bye.